I'm Amy Anderson for OptionRally TV. OptionRally would like to wish you and your loved ones a wonderful holiday season. Now let's take a look at today's market highlights for Friday, December 20th, 2013. Equity markets ease after a big rally on Fed tapering. Facebook and Mark Zuckerberg selling shares. Lastly, gold hits rock bottom. Let's take a quick look at what is happening in the global markets. After ending at record closing highs on Wednesday, the Dow and the S&P 500 finished yesterday mostly unchanged. The Nasdaq slipped slightly. The Fed's decision to taper its stimulus program can be interpreted as a sign the economy is getting back on its feet and no longer needs as much assistance from the central bank. European markets rose by roughly 1.5% in their first opportunity to react to the Fed tapering news. Asian markets ended mixed. Facebook dipped after the social media company filed to sell 70 million shares, mostly to index funds that will be buying the stock once it is added to the S&P 500. That includes more than 41 million shares from the co-founder and CEO Mark Zuckerberg. That will give Mr. Zuckerberg about $2.25 billion. Way to go, Mark. The pullback may be a good buying opportunity, highlighting that Facebook is slated to be added to the S&P 500 at the end of the trading this week, an event that will help further expand the stock's investors base. In the foreign exchange market, the greenback continued to benefit from the so-called taper, touching 104.43 yen in early trade, a high not seen since early October 2008. Japanese authorities appear poised to ramp up stimulus next year to keep one of the world's biggest economies from unraveling. There is growing speculation that the Bank of Japan will announce a widening of its own stimulus program launched in April as part of a drive to kickstart growth in the world's number 3 economy. In other currency trades, the euro eased to 1.3639. It was quite the day in currencies with a focus on precious metals as exhausted traders took a day to recover. Moving to the commodities market, gold tumbled more than 3% and traders blamed the Fed's taper decision. Prices fell below $1,200 an ounce for the first time in over 3 years. Investors have been selling gold futures and gold-backed ETFs this year as stocks have soared to record highs. Prices for physical gold, including bars and coins, have fared better thanks to demand from investors in China. Oil prices eased after gaining 1% a day earlier on smaller stockpiles and signs of stronger U.S. demand. Benchmark U.S. crude shed 29 cents to 98.75. I'm Amy Anderson. Follow me Monday through Friday right here on my channel, at OptionRally.com, and on my Facebook page. Have a great weekend.